Hello everyone, welcome back to Upside Down Data. Today I want to talk about Elrond and what our risk indicator thinks of its recent price action and what DeFi development on Elrond might mean for its future price action. If you like the content, remember to subscribe to the channel, give the video a like, and follow us on Twitter, where we put out regular updates about our risk indicators and more. So what I want to show to give some initial context for what I want to talk about today is just what our risk indicator, the upside downside potential indicator, makes of Elrond's recent price action. So if you're familiar with our risk indicator, you know how to read these graphs, but in brief, what I'm showing you here is the price history of EGLD over time, with each dot being a day and each day color-coded the output of our risk indicator. So 5 is high risk, -5 is low risk. And what you can see is that the UDPI does a good job of identifying these low risk zones and these high risk zones in Elrond's price history. So high risk meaning that correction often follows or at the very best kind of sideways action, and then these low risk zones that oftentimes precede big rallies to the upside. And something you probably noticed is that we're back in the green zone. Now I should note I'm showing you here the medium term UDPI. If you're not familiar, we can actually specify the UDPI to care about different types of risk on different time frames. So for the medium term, what we're talking about is kind of risk in in moves that might play out over weeks, essentially. So it'll still pick up on these kind of broader movements, but also give you information about these kind of intra kind of move volatility and where things might be overheated, leading to some sideways actions before more upside is possible, that kind of a thing. So by hitting this green zone right now, what the medium-term UDPI is saying is that in its estimation, EGLD has more upside potential in kind of the medium term than downside, that in the coming weeks to months, it expects that Elrond has more plausible upside potential in it than downside potential. And we can see this a little bit more clearly if we just look at the raw output of the medium-term UDPI, so UDPI on the y-axis. And again, here's where we are now. So kind of coming out of the summer, we've gotten up to these pretty high risk zones in the medium term, and indeed, we ended up then having to correct after putting in the all-time high, or kind of the second all-time high that coincided with the launch of the Maillard decentralized exchange. We've been kind of correcting off of that point ever since. And so now we're down below -2. And if we look at kind of the overall trend, what you'll see is that at least for the medium-term UDPI, it does seem like there's this kind of macro kind of uptrend that the risk has kind of been painting, which would be consistent with what we'd expect with this kind of macro uptrend that Elrond has been in ever since kind of its inception. And so we're kind of finding higher bottoming points for risk with each of these moves. And so it wouldn't be shocking to me if we end up finding a bottom around where we are currently before being able to move back to the upside. Now that's speculation, that doesn't have to happen. You know, Elrond could fall further, but it'll be consistent with this kind of macro pattern of putting in these higher lows on risk before we're probably going to ultimately put in some kind of blow off top at the end of the broader crypto market cycle. Now again, that's just speculation. Who knows what's going to happen? You know, downside is certainly plausible here, so it wouldn't be impossible for Elrond to fall further, but it would also seem very reasonable for us to be able to start moving back to the upside not too long, and that would be consistent with the model thinks. It thinks there's more realistic upside in the coming weeks to months than there is downside, but again, that doesn't preclude the possibility of downside. So that's kind of what the risk model is saying about EGLD and its price action. I want to talk a little bit about some other just things going on with Elrond that I think are interesting to keep an eye on. So one thing that we talk a lot about on this channel as being a potential driver for price action or for bullish price action is DeFi adoption for these layer 1 protocols like Elrond. And the reason why I think that DeFi adoption is important is for several reasons. So one reason why I think it's important is it's first off just a driver of demand. You know, if people want to use DeFi protocols on a layer 1 blockchain, they have to buy the native token for that blockchain to pay for the transaction fees and for doing all of that kind of thing. So with the launch of the Maillard DEX, there was a big run-up of the EGLD price, probably in part because people wanted to use the Maillard DEX when it launched. You know, it offered really high yield, at least at the beginning, and still now has pretty decent yield that it's offering. So a lot of people probably wanted to buy EGLD to get in on that. And there's also probably just speculation that's happening also, that in kind of leading up to those big events, people oftentimes buy the token just to hold it until that point hits, then sell it off, which is probably also partly why we saw such a deep correction coming off of that. But it is still the fact that if you want that people want to lock up their funds on the decentralized platform need the native token to do so. And so with the Myer exchange having almost $1 billion of total value locked on it, that could drive a lot of demand for EGLD. But of course, when you get these kind of things, what you'd like to see is additional development, right? You'd like to see more protocols, more reasons for people to buy EGLD and lock up their funds on the blockchain to drive more of that demand. And so currently, the Myer DEX has been launched. They're still working to improve it, to add tokens onto it. The first token launched on it, Ride, fairly recently. As more of those start to launch, it's possible that more interest will keep coming back, and that might be able to help the price of EGLD go back up as those happen. But currently, that's kind of, that's the Ride token is launched, and things are just kind of consolidating with that platform. But one thing I saw recently, which I think is just an interesting thing to keep an eye on, again, not to say that anything's guaranteed by any means for this, but it was kind of interesting to see that the Elrond Foundation acquired this crypto payment firm, Utrust, which has kind of an interesting idea of how to leverage DeFi in combination with payments. And so the idea of this this company that's now integrated with the Elrond Foundation, and then presumably going to be using the Elrond blockchain for all of its operation. The idea basically is that with merchants, so people who are receiving payments, the current system with credit cards and things like that is that merchants actually have to pay a pretty hefty fee for each transaction. There's a certain percentage of each transaction that goes to the credit card company to be able to use their service, essentially. And so the merchants are having to pay out of pocket a decent amount of money just to be able to accept credit cards or things like that. And obviously, one of the advantages of something like crypto is that it's going to be a lot cheaper for someone who wants it as a payment method. So let's say, for example, you replace credit cards with crypto. With a blockchain like Elrond, it's with its transaction fees being in the fractions of a penny, it's going to be significantly cheaper to accept payments through a platform like Elrond than it would be through a traditional credit card company or something like that. And what this company is offering, or what they're trying to do, is to combine DeFi with these payments. So not only would it be able to cut out these high fees that merchants have to pay to credit card companies if you supplanted that system with crypto payments, but what this company wants to do is then also let those merchants integrate those payments with DeFi. So when you receive payments, it's not that you're just taking the money, but you can just kind of seamlessly then go ahead and stake it for yield in one way or another. So either through the proof of stake system on Elrond, or even through decentralized platforms like the Myer exchange, for example. So who knows if this is going to work, if this is going to come to anything, or if this is going to mean anything. I think this is still very young and it's just an idea. But I do think it's interesting. And if it were to take off, and if they were to get a lot of adoption, it could see a lot of new money be funneled into the Elrond DeFi ecosystem. And then, just as I was mentioning before, that could be another driver of demand that could then end up helping the chain. So I don't see this personally as being a short-term catalyst by any means. I think this is something that would have to really develop and be a longer-term thing if it were ever to able to produce something. But just something to keep an eye on, because in my estimation, or in my kind of mental model of how the market is valuing these layer 1 blockchains, tends to be the case that broader DeFi adoption tends to lead to higher valuations of the protocols. We've seen this with Avalanche, we've seen this with Solana, seen this with Phantom. It's a repeating pattern, and who knows if that'll continue, but for as long as it does continue, I would see greater DeFi adoption on Elrond as being a bullish catalyst for EGLD price action. So just something I wanted to mention. Again, I don't think this is a slam dunk or something that's going to shoot up the price of Elrond immediately or anything like that, but something I think that's worth keeping an eye on, and especially if Elrond continues to try to branch out into the payments platform. It'll be interesting to see how they do that, because obviously that's one way to drive demand for the token, is if it's just used a lot for payments. But then especially if they kind of get creative with it in these kind of ways, maybe some interesting things could follow. So just some things to keep an eye on. So to wrap up, I want to talk a little bit about just where the UDPI levels stand for EGLD across the different timeframes. So I showed you the medium term, which sits at negative 2.27, but I also want to show you the other ones. So we have a long-term UDPI, which tracks moves that occur kind of over months, so kind of the broader macro market cycle. We also have a short-term UDPI that tracks kind of intra-week volatility, or volatility that can play out just over days to weeks kind of action. And what we can note is that everything is negative, but it is interesting to note that the long-term UDPI is a little bit higher, which suggests that it still thinks that, kind of in the longer term, there is realistic downside potential that could be realized, maybe a little bit more than what's realistic in the kind of more medium term. But it's still saying that overall the risk-reward ratio is positive at the current stage for EGLD right now, that there's more upside potential that's realistic than downside. But certainly there's realistic long-term downside potential that's possible. And so this might just suggest that Elrond might need more time to consolidate potentially before it's ready to really explode to the upside, even if it can realize some kind of more medium-term upside or some more short-term upside. So just something to keep in mind. But again, not financial advice. You should make your own decisions about how to navigate the EGLD market. All right, if you like the content, remember to subscribe to the channel, give the video a like, and follow us on Twitter. And remember, with the UDPI, we're all going to make it.